Funding for the Maddy Report is made possible by grants from Comcast, the Spencer Family, Chevron, Community Health System, Harris Ranch Resort, Producers Dairy, Caleb and Desiree House, Valley Children's Health Care, and The Wonderful Company. Additional support provided by from the Maddy Institute, the Public Policy Institute for the Valley's public universities. This is the Maddy Report with Executive Director of the Maddy Institute, Blake Zanti.
Welcome to the Maddy Report. California's proposed Billionaire Tax Act has stirred recent debate throughout the state. The tax proposes a one-time 5% emergency tax on Californians with a net worth of more than $1 billion. We'll hear from both a proponent of the measure in the first part of the show and an opponent during the second part of the program. Joining us to help explain the supporting side of the measure is Professor Brian Galle, Professor of Law at UC Berkeley. Brian, thank you for joining the Maddy Report today. I really appreciate you being on the program.
Sure thing, it's my pleasure.
Well, for Valley residents just hearing about this, what is the California Billionaire Tax Act and how would it work?
Well, in November, viewers are going to have a chance to vote on whether to impose a one-time 5% wealth tax on California billionaires. And those billionaires can spread it out over 5 years. So it's a 5-year 1% tax for them.
And who would pay this tax? You said folks that have a net worth of over $1 billion. Is that the threshold, or how is net worth defined in the proposal? If you can help break this down for our viewers.
Sure thing. So it's essentially everything that a billionaire owns anywhere in the world, whether they own it directly or through various entities. And there is a small phase-in, but mostly all the billionaires are going to pay about the same amount.
And why is the tax structured as a one-time tax instead of an ongoing wealth tax that could occur year over year?
Sure. Well, again, if billionaires want, they can actually spread it out over 5 years. But the idea is many people may have heard that in July of last year, Congress passed at the president's urging a bill that gave a very large tax cut to millionaires and billionaires, more than $1 trillion over 10 years. And to pay for that, one of the things that Congress did is they slashed federal support for healthcare spending at the state level. And economists I've talked to expect that California is going to lose about $100 billion in federal funding over the next 5 years. And if nobody fills that hole, it's going to be paid for mostly out of the pockets of Californians with health insurance. So essentially what the federal government did is to pay for tax cuts for millionaires and billionaires. They're imposing a flat tax on everyone who buys health insurance, probably of a couple $1,000 a year. So, there are 4 million business owners in California who buy health insurance for their employees, and all of them are looking at a $2,000 per year surcharge on every employee that they have. So that's likely to cause some employers to lay people off, may cause even some hospitals to close. And so to avoid that $100 billion revenue hole, the nurses union in California was looking for a one-time source of revenue to fill that $100 billion hole. And they concluded that kind of the least disruptive way to collect that $100 billion was to collect it from the people who benefited most from the federal tax changes in 2025, and that's the billionaires. So the reason it's a one-time tax is it's intended, and indeed in the ballot initiative, people will see it's earmarked almost exclusively to fill this $100 billion hole in health spending.
That's interesting, and I think the added federal context is really important. So I appreciate you kind of drawing that connection. Professor Galle, you talked about the $100 billion hole in the budget. How much money is this projected to potentially raise for the state? Will it be enough? And how would it be distributed or used specifically? You mentioned trying to, perhaps make up for some of the holes with regard to healthcare and impacts to hospitals. Is that what it would primarily be used for, or are there other uses as well for the state?
Yeah, exactly. So one way to think about what voters are doing in November is they're choosing between two different taxes. Right? One is this flat $2,000 tax per worker, and the other is a tax on billionaires. And we expect them to both be, raise about the same amount of money, right? That $2,000 per worker tax, adds up to $100 billion over 5 years. And billionaires in California today have something like $2.2 trillion in wealth. And, if you just do the math and you discount a little bit for the likelihood that there will be some disputes about what things are worth, you probably get to 5% of, let's call it $2 trillion. That's $100 billion.
Thank you, Professor Galle. We'll be right back after this break. This is the Maddy Report. Welcome back. Professor Galle, thank you for joining the Maddy Report. In just a moment, we'll talk to an opponent of this proposal. Opponents argue that this could drive high-income earners out of the state of California. This is an argument that we've heard from the other side. How would you respond to that concern?
Yeah, well, we've heard this before. So essentially, every time in America that someone has proposed raising taxes on rich people at the state level, wealthy people have threatened to leave, and then largely they haven't. So for example, Prop 30 in California in 2012 resulted in a 1% bump permanently on million-dollar earners in California, and opponents said that millionaires would flee. And today, California has a larger share of the nation's million-dollar earners than it had before 2012. The other thing to emphasize is that the design of the billionaire tax is such that there's absolutely no reason to leave. It's a one-time tax, and it defines residency based on who is here in January of 2026. And I guess I'd have to check my calendar, but I think that already happened. And so, leaving today, or even, there are some who are claiming they, bought a new house in Tahoe in February. That's not going to matter. And indeed, everything that we've seen reported suggests that California's test for who's a tax resident is very strict. And I haven't seen anything to suggest that, essentially any California billionaires have successfully changed their residency. And there's no reason they should.
And this measure also talks about unrealized wealth, not just income. Why is that an important part of the measure?
Yeah, I think people may not realize that even though California has a progressive tax rate, in fact, effectively, billionaires in particular pay a lower tax rate than they do. So for example, there's an economist here at Berkeley who calculates that the richest Americans pay a 20% lower tax rate than the kind of the average American household, which is really remarkable if you think about it. And the reason for that is our income tax system only taxes rich investors when they sell their investment. And so those investors have a choice about when, and at the state level, where to pay tax. And so unsurprisingly, they choose later. Like being a tax procrastinator is really profitable. And indeed, the handful of California's richest billionaires today, that same economist has calculated, paid an effective income tax rate of about 1.5% to California, which is remarkably, less than 1/10 of the official statutory rate. So this is a wealth tax, right? It isn't subject to that rule. It's just a tax on everything you own, whether you've sold it or not. And part of the rationale for it is exactly to make the California tax system a little fairer with respect to billionaires.
That's really interesting. And what, there may be folks who are concerned about fiscal accountability. What accountability measures exist to ensure the money is going to be used for healthcare and public priorities rather than, say, California's overall budget or general fund?
Yeah. And again, people will have the text of this in front of them when they're voting, but there are several pages of detailed mechanisms to make sure that it goes into a lockbox, essentially. There's a pool of dollars where 90% of the revenues have to be dedicated to offsetting this revenue hole that the federal government has created. and the additional funds can be used for food security. Another thing that the 2025 bill did was slash funds for states to provide SNAP benefits and food for needy kids.
And finally, Professor Galle, how could this change California's tax policy for the foreseeable future? Could we see this proposal, if it passes, or even if it doesn't pass, create sort of a precedent as it comes to new considerations for revenue generation strategies in the state of California?
Well, obviously that's up to voters. If they enact it today and they like what happens, then they might consider doing it again. Certainly the idea is to build a structure that voters can use in the future if they like the results. But if they don't, then maybe this is the only time it happens.
Professor Galle, professor of law at UC Berkeley, thank you for joining the Maddy Report today. I really appreciate your time.
Sure thing.
Up next, we'll hear from Rob Lapsley, president of the California Business Roundtable, in his views opposing the measure. This is the Maddy Report. Welcome back to the Maddy Report. We just discussed the merits of the Billionaire Tax Act with proponents supporting the campaign and received an update on where it stands before the election. Now joining us to discuss the opposition is Rob Lapsley, president of the California Business Roundtable. Rob, you've been a guest on the program before. Welcome back to the Maddy Report.
It's my pleasure. Thank you for having me.
Well, thanks again for joining us. And from your perspective, Rob, can you explain what the Billionaire Tax Act is and what it aims to achieve?
So if I could, I'm going to set the stage for that question. And the stage is that California has a massive overspending problem. We don't talk with the legislature or anywhere in California today about where the waste and the fraud and the overspending is happening. We only talk about how to raise more taxes. Okay, so let's do that. So now currently for business, there's 4 taxes that are coming forward for this year. And this includes both billionaires, high income earners, regular income earners, and then corporations. The Progressive Caucus in the legislature has 2 major tax proposals that they unveiled yesterday for billions of dollars for more money. Again, not talk about overspending, not talk about where the waste and the fraud is, which is billions and billions and billions. It's only about more money. Then we have the other 2 measures that are targeted at high income earners. And those 2 are the following. One is the unions, SEIU and CTA, are proposing a measure that will be on the ballot in November, if they qualify, which we believe they will, to make the current high income earner rates that are paid, make them permanent. If anybody remembers back in 2016, when those rates were extended, they were first proposed in 2012, passed, extended in 2016, they're supposed to expire in 2030. But the unions are very focused on making those permanent, which we knew from back in 2012. That measure will be on the ballot in November. Okay, so that is at least $8 billion a year ongoing for the budget. Then on top of that, they've come out with the billionaire tax. The billionaire tax proposed by the United Healthcare Workers that they propose will raise $100 billion over 5 years. Only billionaires pay it by taking 5% of all of their net assets in the 2026 tax year to be able to fund healthcare. Now, the problem with this proposal is that I don't have enough time to be able to go through all the problems, but let me give you a few highlights. Number one, first off, they say it backfills healthcare. For over $20 billion. They have never demonstrated that we have a problem with healthcare currently for $20 billion. There's no evidence to point that we have a $20 billion shortfall. So they're making that up. So we don't need this right off the bat to start. Number two, by proposing this measure, saying they're going to get $100 billion, the Stanford came out yesterday with a study through the Hoover Foundation who does great work, has shown that that is not the reality. At best, they're going to get maybe 40 billion of the 100 billion. Why? Because over 30% of the people who are going to be paying it, we have well over 200 billionaires in California, are already leaving. And I can tell you firsthand that we've talked to dozens and dozens, and they have left. So over 30% net of the people paying it have already left. So that automatically is driving things down. And why are they leaving? Because they are not going to subject themselves to one of the most onerous tax proposals that we've ever seen. It takes 5% of their net assets, Blake, and it allows the state to go in and open up all their books where, under penalty of perjury, to be able to determine if they need to be taxed more, if they reach the $1 billion level. So there are so many things wrong with this that it's unworkable. It's never worked anywhere else in the world. It's not going to work here, but we still have to fight it and we have to defeat it. But we are going to lose money along the way, and we're not going to make money.
Thank you, Rob. Appreciate that overview of the landscape of how this sort of came to be. We're going to go and take a quick break, and then we'll be right back to wrap up our conversation. This is the Maddy Report. Welcome back. Rob Lapsley, president of the California Business Roundtable. Thanks again for joining us on the Maddy Report today. Before you go, I want to look at what the future holds for this measure that we're discussing, the Billionaire Tax Act. Surprisingly, maybe to some, Governor Newsom has expressed his opposition to this proposal, signaling a break from other progressive Democrats. What do you think this divergence signals?
So it's a very good question, but the governor knows more than anyone that when you lose the very people who are paying, over 30% of the state taxes now, that does not bode well for the future. So he knows if the California budget's going to survive, that we have to try and keep these people. Well, too late. Sorry, they left. And so that's what he's going to get as a result of the United Healthcare Workers. So we appreciate the governor's support. We will be working with them to get the messages out on why this is bad, but it's really going to be, after all these people have made decisions to leave. And again, remember, this is not just about taxes, it's about creating jobs and creating investment in California throughout the state, because that's what they do. So we also look ahead, Blake, to where are the other gubernatorial candidates, because we have one of the most wide open governor's races now since the 70s. And we have Tom Steyer, who totally supports this, right? And obviously with that, we know what the repercussions are going to be. We are working hard to get the other candidates to oppose. Eric Swalwell opposes, Matt Mahan opposes, and we want all the other gubernatorial candidates, Antonio Villaraigosa, they all oppose. They know what the reality of this is.
Now, you talked about those candidates in opposition that are running for, as you stated, the wide open governor's race. Certainly, it's a crowded field, and we're definitely gonna see some movement in that race to see who emerges as the front runner. But what about for everyday Californians? Why should they oppose this measure? And you kind of laid out the landscape, but maybe just for an everyday Californian who's maybe not a billionaire watching this program today, why should they oppose it, in your view?
So the reality of this proposal is that when you implement a new tax and essentially a new spending expectation, once those revenues disappear, people are going to want those services. So we're going to have a new spending expectation for California that's going to have to be backfilled. And what's going to happen with this for all of your viewers is that if this measure passes, ultimately everybody in California is going to pay this. The authors of the measure put in the initiative that the legislature can change the thresholds of who pays this tax at any time. So that means after billionaires leave, then they can start ratcheting down how this gets implemented and at what levels. And that's exactly what's going to happen. So we have seen this time and time again. But ultimately, to your viewers, if this tax passes over time, every Californian is going to be paying it.
Now, you just referenced this, Rob, and my last question to you is, if the measure does pass, how quickly could it realistically take effect and actually be implemented? And what would we see any immediate impacts with that implementation, or do you see it gradually playing out over time?
So a couple things. We believe it'll be on the ballot in November. They're working hard to get the signatures to qualify it, number one. Number two, right, if it is on the ballot, I just want to be clear about this, Blake, that we will be running a strong opposition campaign, and we do believe we can defeat it. So we have defeated other major taxes, and people, when we see what the arguments are around this, we absolutely are confident that we're going to be able to defeat this. But number three, the next step is, if it does pass, is that it will be challenged in court. We will be leading that fight. We're already underway to be able to do that. So there's so many structural constitutional issues in this that we will be filing the next day after the election in court to do this. And then the fourth, to answer your question, is that the state will move forward. They have to pass regulations. All of this goes to the Franchise Tax Board. They're asking for $300 million in a new unit to just go after the billionaires and and tax their assets. So, and it does, again, it taxes their 2026 tax year. So it's a retroactive tax, and they will be moving quickly to implement it, but it will take, probably about a year, I would say, to be able to truly start to get this done.
Rob Lapsley, president of the California Business Roundtable, thanks again for joining the Maddy Report today to discuss the proposed billionaire tax. Really appreciate you being back on the program.
It's my pleasure. Thank you for looking at this issue.
And thank you for tuning into the Maddy Report. To learn more about the Maddy Institute, visit themaddyinstitute.org. The views expressed in the Maddy Report are those of the individuals participating in the program and do not necessarily reflect the views of the Maddy Institute. If you'd like to share your thoughts about today's episode of the Maddy Report, please visit our website at maddyinstitute.com.